Nigeria's equity market closed in the positive territory today, up 0.31%, ahead of the Monetary Policy Committee's meeting where 6 members voted to cut down the monetary policy rate to 11.5%. Fajimolu, the Chief Research Officer at Blue Vertex, joins me now to discuss what this means for the equities market. Thank you so much for your time on the show. Dari, very interesting what we're looking at and what played out with the central bank today, talking about that MPC announcement and cutting the rates by 100 basis points. What's your take on how this will play out in equities?
Thank you for having me on your show. So in terms of the CBN move, it's not particularly surprising because we, before now, the CBN has been taking certain steps to try and stimulate the economy. So seeing that the CBN is seeing the reduction on the NPR is not particularly surprising. However, where we see that the CBN maintains the CRR is a reflection of the fact that the CBN still wants to maintain a tight stance on in a way. And as you mentioned, that the recent inflation is not driven by monetary policy. But we cannot look at these moves in isolation because on one hand, the reduction of the NPR will try and stimulate lending and trigger expansionary activities in the economy. However, recent increase in the price of fuel price, increase in fuel and electricity tariff will reduce the disposable income of consumers and thereby lower investable funds, which ultimately will also increase cost of operations for the companies. So it's almost as though the CBN is trying to countercheck the pressure that is currently going on in the market, in the economy as a whole. So I'm not sure we're going to really have much impact on equity because it's going to be the recent increases will reflect in the profitability of this company. So we might just be approaching a state of equilibrium.
Yeah, but when you look at the sectors, though, which ones do you think this would be would impact the most?
I think a sector that would expect the players in the space to take advantage will probably be the consumer space, because that is where that is the primary. That's where we have the primary effect of the increase in electricity tariff and price of fuel. But at the same time, we also see effect in the banks, of course, because they are the ones that are at the end of the whole value chain, because they are the ones interfacing with the consumers, or more or less, actually, these policies are going to be reflected in their own operations most. So those are the two sectors that I feel will be mostly impacted based on the move of the central bank.
All right, but how do you think the policy environment, now that we're seeing this pro-growth environment and the availability of probably cheaper credit by this decision, would mean in the longer term for listed companies?
Okay, in terms of in the longer term, ideally it's supposed to drive expansionary activities, which is the ultimate goal of the CBN. I mean, at least based on its body language from what the notes today. But in the long term, as I'm not sure how this is going to really possibly strengthen the financials of the company, because at the end of the day, it is the cost of operations that determines, to a large extent, that determine the profitability of the company. There's a limit to which the companies can actually pass on the operating cost to consumers. So it's now it's going to be a matter of efficiency on the part of the companies, because except there's some form of improvement in probably electricity supply, or improvement in terms of the form of energy that will be used to run the plants and other activities, then we're still going to have that equilibrium going